Konnichiwa and Assalamu alaikum. In corporate news this week, we've seen markets rally in the UAE, particularly the larger cap stocks, including Amar, Drake & Skull, Arabtech, UPP, and also Eldar. And volumes have been very strong, around the 2 billion dirham mark per day, indicating strong accumulation by both local and foreign investors. On technicals, the DFM index has broken through the 2,200 barrier, and the next level of resistance is all the way up to 2,500 over the medium term. In banking sector news, there's been more commentary this week about the low level of provisioning for bad debts with UAE banks. Total provisions by the main banks total 26.3 billion dirhams versus a total loan book of 1 trillion dirhams. Therefore, with non-performing loans around 1.3 or 1.5% and likely to rise, there's a theory that the provisioning from UAE banks will not cover this rising non-performing loans. Therefore, we still remain defensive on the UAE banking sector, preferring banks that are well provided for, are well capitalised and have the ability to absorb any pressure on non-performing loans. These banks include First Gulf Bank, National Bank of Abu Dhabi and Union National Bank. On a separate theme, the prices of many of the Tier 2 UAE stocks have risen through the 1 dirham mark, which is a psychological barrier. These stocks include Tabreed, Drake & Skull, Union Properties, Air Arabia, and indeed the prices have run well above 1 dirham. We believe that the next stock to potentially move through this range will be Gulf Navigation, currently trading at around 88 fils. With global GDP trends trending positive for next year, some indications that world trade has picked up and a strong cash balance, we believe that Gulf Navigation is in a strong position as a cyclical company to benefit from the upswing in economic activity next year. Furthermore, the company has 5 of its 19 tankers already leased out at favourable contract rates to Saudi conglomerate SABIC, with the remainder on spot rates to other clients around the Gulf. The next catalyst for Gulf Navigation will be the Baltic Dry Index, global trade and the third quarter result due in coming weeks. DFM stock has also risen above our base case scenario of 2.22 dirhams per share, with volumes traded on the DFM very strong at over 1.5 billion dirhams on average this week. We believe that the stock is heading towards our bull case scenario of 2.89 dirhams per share. Dubai Islamic Bank and also Ajman Bank this week disclosed that they have zero exposure to the troubled Saudi groups Al Ghassabi and Saad. There are around 13 banks with exposure to these groups. The bulk of the exposures lie with Mashreq Bank and Abu Dhabi Commercial Bank. Union Properties has given guidance that expects a strong third quarter result, well up on this time last year, as it begins to hand over some of its properties and bring the sales through the profit and loss statement. In other corporate news, Dubai Property has shown some signs of recovery, with villa prices actually rising by 8% during the third quarter and apartment prices falling by 3%. The steep declines that we saw in the first half of 2009 are slowing up, and property prices appear to be reaching the bottom of the cycle, allowing investors and sellers to reach an equilibrium at which turnover increases. Further, according to Ventures Middle East, a total of 213 building and infrastructure projects were awarded during the first nine months of 2009, total valued at 92.5 billion dirhams. Although this is around 59% below the same level in 2008, it does highlight that there are ongoing signs of life in the Dubai property market, and as a percentage of GDP, there still remains a lot more construction activity here than in other parts of the world. Management consultant A.T. Carney has highlighted that there remains an untapped revenue stream of around $30 billion around the Gulf region for property companies providing ancillary and other facilities related services to clients. The UAE's share of this potential pool of funds is between 5 and 10 billion US, and really supports the transition in business models from a sales model to more of a services, ancillary and facilities provider with investment properties, which has been the trend of business models for Aldar and EMAR over the last 2 years, and we believe going forward creates a more favourable earnings profile for these companies based on revenue streams trending towards reoccurring avenues for growth. That's all for corporate news this week. Happy investing, Ilarika, and sayonara!